Exhibits 3 through 24 and 58 are admitted. Okay, you can go ahead, Ms. Lander.
Thank you, Your Honor. So, Mr. Gimenez, you said that Windermere can't survive financially if it doesn't recover its legal expenses through its rates. Is that correct?
That's correct.
Okay. But there are other ways that Windermere could pay for its legal expenses, right?
I mean, all money comes from the corporation, which is the members.
Okay.
I mean, there are we can't go out and operate any side businesses.
Right, foregoing the option for side hustle, let's talk about things that you've mentioned in your testimony. So if I'm not mistaken, you noted in your testimony that there is the possibility of recovering some $400,000 to $500,000 as a result of the Allied World lawsuit. Is that correct?
That's correct.
Okay. And there's also potential recovery of legal expenses from Dana Martin related to expenses incurred on behalf of the corporation to cover Ms. Martin's legal expenses, correct?
That's correct.
And as a result of the Burnett County decision, which found Ms. Martin guilty of breach of fiduciary duty, the WSC could recover $70,000 from that action. Is that correct?
Well, that's been modified somewhat since my testimony, because the judgment on March 1st said $35,000 would be payable to us and $35,000 to the plaintiffs.
Understood. So you could recover $35,000.
Yes, ma'am.
Okay. Tell me, there are equity buy-in fees that members have to pay to be part of the WSC. Is that correct?
Yes, ma'am.
Are those refundable?
I have not reviewed the tariff to understand whether that would be refundable or not.
Okay. Well, for now, I want you to take a look at what I just admitted as Exhibit 58, which is the response to 8-2. And if we scroll and scroll and scroll, let's see, let me get to the right page and I'll share my screen. So, can you see that?
Yes, ma'am.
All right. Can you tell me how much money Windermere made in 2020 in equity buy-in fees? Or, I'm sorry, in standby fees.
Your cursor is right on the top there, so it's 41,184.
Okay, so those are not base rates. Those are standby fees, and that's something totally different, right?
Yes, ma'am.
Okay, so that was $41,000 in the year 2020 that didn't come from rates.
Correct.
Okay, and let's see, let's scroll down a little bit more.
By the way, that was the document that I was referring Ms. Allen to a few minutes ago.
Terrific. So in 2021, how much money did Windermere make in standby fees?
$45,110.17.
Okay, so you guys recovered $45,000 that was not from base rates or from gallonage income.
Correct.
Okay, so I have $400,000 to $500,000 from Allied World. I have possibly $50,000 from Dana Martin. I have $35,000 from the Burnett County decision. I have $45,000 in standby fees in 2021. I have some $40,000 from 2020. And that to me sounds like a lot of money that doesn't come from the rates. Is that right?
That's right.
Okay.
But I would just say that you threw in some cases that are pending still, right? The insurance appeal. The insurance case is being appealed. So, whereas what you stated was it's possible, yes, and the other case, the 48292 case, the land sale case, we don't know whether that's going to go to appeal or not. So, you know, we're not sure what the final outcome would be. So I would just asterisk, you know, those are pending appeal.
I understand that those are pending, but my point is that Windermere doesn't get all of its money from base rates and gallonage rates.
We have a couple other sources of income there, standby fees and equity buying. And fees.
Yeah.
Yes, ma'am.
And if you look at, let me just pull it up really quickly. Staff Exhibit 9, which is, sorry, give me 1 second and I'll pull that up for you. Staff Exhibit 9 is an RFI response that sort of sets out 2017 through, I think, 2020, the standby and membership and equity buy-in fees. And it looks like about 10%. Make sure I'm going to open the right exhibit for you. I apologize, I can't put my hands on that right now. But if Windermere's bringing in $40,000 a year in standby fees, it could even potentially use that money to pay its legal expenses, right?
Yes, ma'am.
Okay, so it's not true that you have to get all of your money from base rates or gallonage fees. I also want to talk a little bit about the budget from 2020, which I understand was used to set the rates that were put into place in early 2020. So let me pull that up for you. And I'm so sorry, Acrobat has decided to stop working. So I'm gonna have to close all my tabs, reopen all of my tabs. But you can accept that Windermere's rates that were put into place in 2020 were set to recover $250,000 in legal expenses. Do you remember that from the 2020 budget?
Well, yes, we put 250,000 into the budget.
And Mr. Nelson has stated that the rates were set to recover the $174,000 shortfall that showed up after the 2020 budget was developed, correct?
I think that's, yes, ma'am, I think that's what we said.
Okay. So I want to look at the 2019 actuals. And I'm going to share my screen. So these are the 2020 actuals. Or sorry, the 2019 actuals, and this is the 2020 budget. So I want to look at just a couple of the line items from these two documents. For example, accounting. The 2020 budget, which is what was used to set the rates that were put into place in 2020, is set to recover $13,000 for accounting. Is that correct?
That's what it says, yes, ma'am.
Okay. And then if we look here at what has been admitted during the first hearing on the merits as ratepayers Exhibit 36, this is the 2019 profit and loss statement. And if you scroll down, can you read that and see how much money was spent on accounting in 2019? Can you read that?
I can read that, but I'm not sure that, I'd like to see the screen blown out a little bit.
Sure, I just wanted to zoom in case you need to be able to see it a little bit bigger to be able to read it. It's a little fuzzy. So, profit and loss budget performance, December 2019, accounting.
Yes, ma'am, that's what it says.
Okay, can you tell me where in the record it says that there was a known and measurable cost adjustment from $1,685 to $13,000?
Well, I can't point to any place in the record. I would question whether that number, obviously it was right, because we had budgeted, or people who prepared that budget in 2018 had $10,000 of anticipated expense. So,
right. However, your rates are set on based on a test year adjusted for known and measurable changes, correct?
yes, ma'am.
So if in 2019 you spent $1,700 on accounting, can you tell me where in the record it justifies an increase to $13,000 for accounting?
I can't point to a place in the record, ma'am.
Okay, so given that there's no justification for this increase of some like $1,400, or sorry, $3,400, that means that Windermere has been over recovering for accounting by about $11,500 per year for 3 years. So even like being generous and assuming that maybe things cost a little more in 2023 than they did in 2020, that's 3 years of some $10,000 that Windermere has recovered for accounting that it doesn't need for accounting. Is that right?
If that's your math, yes, ma'am.
Okay, so that 30,000.
I just want to say that, I think that that's an error. I know that in talks with my, our manager in the past, that's, that we pay, I don't know, $400 to $800 a month or more for our accounting. So that number there just seems like it's an error.
Okay, all I can do is rely on the numbers that are in the record. So if there's something in the record that says accounting costs almost $13,000 a year, then you know what? I'll take it all back. But as it is in the record, it looks like you're bringing in at least $10,000 more per year than you need for accounting, and that amount could be put to pay down the balance of legal expenses. And let's talk about postage and shipping. So if you look at, for example, postage and shipping for 2019, which is here, it looks like it was about $2,700 in 2019, correct?
Yes, ma'am.
Okay. And here, if you look at postage and shipping, it's $5,000. The rates were set to recover some $5,000. Is that correct?
Well, that is a budget, right? So that's your expectations for future.
Right, but Mr. Nelson has already said you guys had the TRWA worksheet, but then you adjusted it to recover a $174,000 shortfall. And if I'm not mistaken, this budget is where you get the $174,000 shortfall.
Yes, ma'am.
Yes. So your rates were set to recover this shortfall, and this shortfall is based on these numbers. And so your rates are set to recover these amounts, and you've recovered $5,000 per year for postage and shipping, whereas in 2019, you spent $2,700. Can you point me to a place in the record where you can show a known and measurable adjustment to postage and shipping of about $2,300?
No, ma'am, not right now.
Okay, so even that, let's call it $7,000 over the course of 3 years. You could use that amount to pay for legal expenses. Is that correct?
Yes, ma'am.
Okay. So what I'm hearing is there are external funds or funds that are not part of the rates that could be used to pay legal expenses. There are funds in the budget that are allocated to things that don't seem to cost as much as what the budget says they cost, and that money could be used to pay off legal expenses. Is that right?
And the way you say it, yes, ma'am.
Okay, great. So a couple of other questions. Has Windermere increased tap fees to account for inflation?
I don't think that we've done anything with increase of any fees since the rate case, so no.
Well, I guess what I'm asking is, when was the last time that tap fees were increased?
I can't answer that. I don't know the history on that.
Okay,
It
not within
hasn't.
the last 3 to 4 years.
No, ma'am. Not to my knowledge. No.
Okay, so theoretically, as tap fees are supposed to be, as much as it costs to install a new tap, it could be that you guys are undercharging for tap fees.
Theoretically, it could be.
It could be. So you could raise the tap fees so that Windermere isn't subsidizing its new members' taps if they are being undercharged. Is that correct?
I'm not familiar with the process for increasing tap fees, so I will take your word for it. But we haven't done it, so haven't looked at that as a possibility.
Okay. So tap fees have not been adjusted for inflation. Have equity buy-in fees been adjusted so that new members are at parity with existing members that sort of paid yesterday's costs of equipment and facilities?
Ma'am, my answer is pretty much the same. I mean, I haven't looked at that. I don't know the process for that. So we have not done that.
So you could raise equity buy-in fees. You could amend your tariff. You've amended your tariff before, right?
Yes, ma'am.
Okay.
I mean, I assume that what you're saying is true. I just don't know the legalities of that, or if we can, how we can, all that kind of stuff. So
Okay.
I'll take your word for it. Okay.
If one could adjust one's equity buy-in fees, one could find money that doesn't come from the rates, and one could use that money to pay legal expenses.
That's true.
Okay. I don't want to keep us here all day because I know that people have questions for staff witnesses, so just one other major topic. I want to talk a little bit about revenue requirements. So you responded to ratepayers 8-2, correct? Which is staff 58 now?
Yes, ma'am, I believe so.
Okay. And in that response, you talk a lot about numbers that are not revenue requirements, correct?
You'll have to remind me what those were.
Okay. Just really quickly, it is important to note that the amounts shown in the attachment do not represent a revenue requirement. Revenue requirement is a term of art primarily associated with rate studies. Does that sound familiar to you?
Yes, ma'am.
Okay, so you can tell me what a revenue requirement is not.
I mean, are you asking me to make an essay on this right now? Is that what you're?
Well, no, I'm just asking you, based on your response to 8-2, where you say that certain numbers are not revenue requirements, it's safe to assume that you understand what a revenue requirement is.
A revenue requirement, from my understanding, is on the TRWA spreadsheet that we used, we plugged in the numbers of actual expenses, and we got the revenue requirement.
Okay, but you didn't actually use the revenue requirement on the TRWA spreadsheet, did you?
We use that as a basis.
As the basis, but that's not actually what your rates are designed to recover, is it?
I mean, it's certainly part of it. I mean, I don't know how to. Our rates, I mean, when you look at, or when we looked at the overall picture in front of us, we knew that we had, equity buy-in fees. We had possibility for, a wet summer, a dry summer, so that more people would use water. We also knew that we had some fees, or we had some expenses in 2019. I talked about this in my testimony, my first testimony, where we, a lot of those fees we had to pay for a barge repair in that was had been damaged in a 2018 flood. So,
if I'm not mistaken, though, I'm asking how much money your rates are designed to recover. Are your rates designed to recover $576,000 a year?
Yes, ma'am. That was our revenue requirement.
And that's it. You should only be recovering about $576,000 a year.
Well, no, we knew that there would be more income so that we could cover other costs, including the legal fees.
Okay, so you needed to recover more than $576,000 per year.
I think that we adjusted it. Didn't we adjust it through the budget? Or, we realized there was a shortfall.
Okay, so you needed to make more than $576,000 per year to cover all of your expenses.
We knew that that was the revenue requirement, and we also. Well, I'm sorry. I'm recalling now. You see, the budget, when we created the rates at the time, we did not know that we would spend $250,000 for legal fees.
But you had set rates to recover $250,000 in legal expenses, right? Because you set it to recover that budget shortfall of $174,000, which included $250,000 in legal expenses.
Right, that's right.
Okay, and so I just want to check and make sure. you needed to recover more than $576,000 per year to cover all of your budgeted expenses, and you set rates to recover the amount necessary to pay all of your budgeted expenses.
And I'm sorry, my phone went off. You'll have to do that one again. My phone went off, and hang on just 1 second. Okay, say that again, please.
You set rates to recover more than $576,000. Correct?
We knew that. I don't know how to answer that, because we had to set rates for the 579,000 as the top. That was what we thought it would be. I mean, that was what we knew would be the most that we would have to or could, based on the previous year's the previous year's expenses.
I'm really sorry to belabor this point. You knew that you needed to recover more than $576,000 to cover all of your budgeted expenses, correct?
I don't know how to answer that, because we're talking, past versus forward, and you're also working on a expectation that you don't know about. So I don't know how that.
Sorry, I'm sorry. I need to interrupt. This is really not that confusing, and I'm sorry if I'm making it confusing. Based on RFI responses, it seems pretty clear that rates were set based on the TRWA study and then adjusted for the 2020 budget. And the rates were adjusted to recover the $174,000 shortfall that's represented in this 2020 budget, correct?
I'm having a hard time squaring the circle the way that you're putting it.
Well, I think that's possibly because you can't square the circle, because you set rates to recover this $174,000 shortfall, and there's no way to get there with $576,000. And let's just make this really easy. If your rates were set to recover $576,000, is it reasonable that your income for 2019, or for 2020 rather, would be $677,000?
It is reasonable that would be the case, because of the buy-in fees. We had a lot of people move into the neighborhood during the COVID era and use more water. So the volumetric rates were more than they were, had been. So yes, ma'am.
So interestingly enough, 677 is pretty close to the total amount that this budget implies that Windermere needs to make. Is that true?
677. I don't have a calculator with me to add those. I don't know the answer to your question.
Okay. I guess what I'm saying is, if the TRWA study said revenue requirement of 576, and then you adjusted it to make up a $174,000 difference and implemented rates based on that difference, you did not implement rates to recover only $576,000, did you?
I just don't know how to answer that question because there were other factors and we also reduced the TRWA recommended rate.
How much money are your rates designed to recover, including other revenues?
I don't have that number off the top of my head now.
Are other revenues included in the $576,000?
That was, that 576 was just the expenses from 2019, if I recall correctly.
So you implemented rates, volumetric and base, to recover for $576,000, but you also knew that you were going to make some amount of money from other revenues, and you did not use those other revenues to offset what you are calling your revenue requirement of $576,000.
I don't think the TRWA spreadsheet did that.
You're right, it didn't. It didn't take into account other revenues at all, which I don't even need to comment on that. I guess I just want to leave it with this. Would $576,000 cover all of Windermere's projected expenses for 2020?
Well, no.
No. Okay, that's it. That's all I have. Ms. Molden asked you about whether you knew when you might be able to recover any funds related to the Allied World or the Friendship Homes cases, and you said that you don't know when you might get those funds, correct?
That's correct.
Okay. With any of your law firms, did you ever discuss with them the possibility of deferring payment until a final decision had been reached?
No, ma'am, that's my recollection.
No, okay, so it's possible that you could have deferred payment until a final decision was reached rather than incorporating however many hundreds of thousands of dollars it is at this point into the rates.
It's possible.
Okay. With regard to standby fees, $40,000 a year out of an income of, let's just call it, because 2020 actuals I think were 677. So you said you have your phone with you, right?
Yes, ma'am.
What is 40 divided by 677?
Just gonna do this on my desktop calculator. 40 divided by 677.
Correct.
0.059, so 6%.
6%. If someone decreased your yearly salary by 6%, would that give you pause?
I mean, I don't know how to answer that. I don't.
Would you consider a 6% decrease in your yearly salary to be moderate?
Very minimal.
I'm sorry?
It's very minimal.
6%.
I'm sorry, ma'am. I'm not the person to talk to about salary. I am a private contractor. I don't get salary from clients. My income fluctuates. So.
And Ms. Lehner, we probably need to move on.